from data to dollars, unlocking the hidden value in your predictive models. So FCA, his background is actuary and data scientist. He's worked all over the spectrum. FCA, I'm going to hand over to you.
All right, cool, sure. Getting used to the microphone here. Cool. I assume this is the jobby. Cool. Hi, everyone, and I know this is a kind of an awkward slot to get talking, particularly as it's the one right before lunch. I can see some hungry eyes there. Please don't eat your neighbor. I'll try to be quick. What I'd like to cover today is about connecting a conversation between a scientist and an executive in a company. And that really focuses on how to get the kind of backing for the data analytics, the AI, all of these projects that you want to do. How do you get the conversation going in the right direction between the different almost time horizons and different entities to actually get your cool use cases consistently implemented? Okay, so this is me, and it's always a little bit awkward. It feels like you're sort of talking, bragging about yourself, but I'm FC de Vos. I'm the CEO of Analytix Engine. I've been working for about 17 years, most of that in consulting, a little bit of a portion there directly for a bank. Background is became an actuary and then sort of started in the pensions world and then ran in the opposite direction because that was not the most exciting part of where I wanted to spend my time. So started off in that kind of a universe and then moved over into what was then called analytics, then it went into advanced analytics, strategy analytics. Eventually it's now at the point where it's called data science. So so you can see the sort of the very heavy actuarial background at the start and then moving over into the data engineering and the machine learning and those kinds of environments. Cool. What are we going to talk about today? I'm going to talk about why do we want to align our analytics and AI with business cases? How do we get that conversation going? Part of that, you need to understand what winning looks like. How do we decide that we are winning, and how do we, as the last part, communicate that we've won? How do we communicate the value that we create? So we've got a couple of AI-generated images here, just from straight up DALL-E, nothing spectacular. But every now and then you'll see people with extra hands, 2 heads, that kind of thing. I enjoy that to see what people pick up. So if you see something funny, have a look. Great. About Analytix Engine, my business partner and I, Praveen Bora, started Analytix Engine together about 6 years ago. And what we want to do is we want to help people make better decisions using data and analytics. If we summarize all of the strange and seemingly diverse things that we do, is we basically model human behavior. So that would be something like, will this person repay their loan? How long is this person going to stay with our organization? How do we decide where to put our retention activity? Then what we'll do is we'll see, okay, that's great. That's the traditional, almost data science kind of aspect of it. But what's the financial impact of that? What does it mean if this person leaves? If this person's actually costing us money, should we actually be directing any retention activity towards that person? So we want to understand the profitability associated with the human behavior. And the third step of that is always, all right, we understand the value of this behavior. How do we help businesses and effectively the end customers get value from that? So these are the broad categories of things that we do, and I do realize I have 20 minutes, so I'm going to be quick. First is customer value management, which tends to be your customer segmentation, your recommendation engines, your churn prediction models, all of those almost traditional customer value management aspects. Then we spend a lot of time helping our customers with data engineering and model automation, which is just making sure that everything runs smoothly. We call it model works. We just want the models to work. Then we do a lot of accounting and regulatory modeling on the quantitative side, which is your IFRS 9, IFRS 17, Basel, that kind of modeling. And lastly, we do credit scorecards, which is, I don't think I have to tell anybody at the FinTech Forum what a credit scorecard is. Great. So why do we want to align with the business use case? And a lot of it for me starts with a conversation. And this conversation is in aspects where I've actually been on both sides of this. So it's interesting to see this play out. And the conversation here is between a data scientist, his WhatsApp messages, to his executive director. And how this conversation often goes, to whatever extent, you'll find that I found this amazing new algorithm, it's going to be so cool, we're going to plug in new data sets and all of these things, right? So that he's excited about this scientific thing that he wants to do. And he's speaking to his executive to try and sort of get permission to do this. And the executive will then go into the aspect of, it sounds very exciting, but let's just think about how we value this approach of yours. What value can we create with this? And the data scientist goes, sure, I don't know if I really want to focus on the corporate aspect of life, them all being, including myself, we see ourselves as artists and saying, maybe we can help predict fraud, right? So just thinking up something. Exec says, good, that's a great start. Now, how are we going to communicate this value that you want to create to get the funding that you need? And, okay, well, I suppose we can show predicting and preventing fraud can save us money by reducing fraudulent transactions. Exec goes, exactly. Once we have the funding, we can get this into a solution. How are we going to measure its success? And then the data scientist goes, okay, well, we can track the reduction in fraudulent activities and the associated cost. And great, now that we've proved the value, that gives us what we need to convince people next time to allow us to do an experiment again. Now, why do we keep on talking about this value? Do we actually believe it exists? And I think we're all probably in the universe of saying that, yes, that value does exist. But there's a bit of a jadedness in the market at the moment that we want to address as well. So the first one is there's a global surge in spending. If you look at the kind of funding that's gone behind companies like OpenAI and the likes, there's a lot of funding going on. The estimate is that more than 215 billion USD will be spent on big data analytics and analytics in 2024. Now that's a lot of money, and the AI spend has doubled since 2020. And the projections of that spend they're just going up. We've got a relatively small percentage of this, and we do want to attract more of that in terms of the South African attraction of that spend and for other African countries as well. So we know that people are willing to invest. But at the moment, a lot of people aren't getting the value for their money. 27% of starter AI companies are currently not showing any good financial returns. 75% of AI projects take at least twice as long as originally estimated to complete, right? And most analytics projects, as was previously discussed in the previous session, don't actually make it to production. So a lot of people they have a jaded kind of feeling towards it. So how do we get people to engage with what we're trying to say and to actually extract the value that we're trying to create? The value does exist. So in one JP Morgan Chase example, they reduced their number of fraudulent transactions by 150 million USD per annum. What we've seen on our own side is if you use a recommendation engine, for example, on one of ours, and we thought we were smoking our socks when we got this result, so we tested it in different industries and got something similar, but you can quadruple your sales by using the right recommendation engine. So the value's there. But the point is you need to be able to connect the value to what you want to do to attract the funding. Right. So as we go through the sort of more highfalutin topics, we do want to talk about a specific example as we go. So the first one that we're going to talk about is a recommendation engine. So typically something like your Netflix will have what's the movie that you're going to watch next. Or a call center will want to know, do I call this person for a credit card or a revolving credit product? So that's broadly what a recommendation engine is. The example we're talking about is cross-selling. So somebody who's already one of our customers, and we want to sell them another product of ours. It could be they're already a credit card customer, and we want to sell a revolving credit product. There's going to be two sort of views that we're trying to connect. The first is your typical data scientist view, who goes, I want to use this really cool algorithm. It can predict 5 times faster and 10 times more accurately. Versus your executive sponsor, whose responsibility is, I need to increase my sales by 20% year on year. Right. So here's one of the great ones where somebody's holding up a bag full of hands, which is kind of creepy, but I like it. Cool. So the first question is, what does winning look like? And I would say, typical to any kind of analyst, they will say it depends. Well, in this case, it depends on who you are. So we've got 3 broad categories over here. You've got a company or a corporate perspective, which is your big bang perspective, and it actually represents your shareholders' interest in what's going on. They tend to focus on strategic objectives and long-term goals. They see a customer as an asset instead of an income statement line item, right? What is this customer worth to us over his lifetime rather than what's the profit that we're going to make from him just this year? Typical things we look at there is revenue growth, market share, those kinds of things that tend to get mentioned on some of the news channels. Where you can find these things, and particularly where we find them, because we do need to market as consultants, is annual reports, your strategic plans for businesses, industry benchmarks, and those kinds of things. Representing the company, you've got an executive, right? And the executive perspective focuses on leadership goals. He needs to lead a department and a team, as well as for the specific department that he's in charge of. He needs to make sure that performance skyrockets, right? So typically, this will be things like operational efficiency, customer satisfaction, cost management, sales, those kinds of things. And typically, you'll find that in their performance reviews, which you won't have access to. But departmental reports, dashboards, those kinds of things, you can pick some of those up. And if you are in an organization, you can go the old school way and just ask the executive what his KPIs are. If you're the data scientist or the artist in this case, we do focus quite a lot on the technical and analytical success measures. So typically, they'll be interested in how accurately can I predict this? How much lift can I create? And that kind of thing, right? And that tends to be in project documentation, model reports, and those kinds of things. Now, as we can see, these are 3 very different perspectives, and you have to marry all 3 of them for your project to be successful. And basically, it's a time horizon difference. That's actually the big thing over there. So for a company, they're looking at long-term shareholder value that gets created, while an executive has a KPI for this year, and those KPIs run the board kind of thing. And then you've got your data scientist who's super interested in clever math and how well their model fits and all the statistical measures. Now, to make this a bit more practical, because I know it sounds a bit out there. So from a company perspective, you will have that they want to drive lifetime revenue growth. So how does that growth get produced? And it gets produced from the ground up. So that gets produced from the data scientist side. The data scientist goes, all right, I've got different measures. I want to do a take-up rate. With my model, I'm getting 0.4% take-up, and without my model, it's 0.1% take-up. Now, those seem like really low numbers, but that's a 0.3% difference. One's actually 4 times as much sales than without. So you can see that there's definitely value there to be had. So if you contact 1 million customers, that means that you're going to get 3,000 sales extra out compared to your 1,000 sales that you're making up at the moment. So the executive then goes, all right, great, that's all well and good, but I'm actually responsible for the profitability aspect of this. So I'm looking at 1 year's profit. I'm going 3,000 extra sales at 1,000 Rand a sale gives me 3 million Rand extra in the year that I'm getting. The corporate perspective then goes, all right, we've now gone ground up and we wanted to know what is the lifetime value that we've created? What's the shareholder value? We view our customer as an asset. So we say that 3 million Rand we're going to make a year, we're going to make that for 5 years. So the value of this exercise that it's created is 15 million. It's cost us 2.5 million to build, and that means they've made 12.5 million Rand profit off this exercise, right? So that's how you take the story from one into the other to make sure that everybody gets the value that they need. All right, so speaking as a nerd, I believe I can call myself a nerd, what you want to do is you want to connect the nerds to the shareholders. So you want to figure out how to get to that 0.3% statistical lift through to the 12.5 million rand shareholder value. And you have to make that message ring true so that everybody knows how much value that's been created so that you can do your next exercise and the next and the next. Right. Then instead of just doing little experiments in your backyard and hoping that you're going to create value, you do need to stop lagging the industry and start doing things. So the first one is you're going to have to experiment. Not all data science projects are guaranteed to produce value, but the ones that do produce value definitely make up for the one or two that won't. So the first one is design your experiment that you want to create with the business value that it's going to create. So take those three sort of pillars that we were talking about and make sure that it aligns across the three pillars. The next one is user adoption. And this is where a lot of data science projects fall flat. We say we're going to build this recommendation engine, but nobody actually went and thought, okay, hold on. The call center actually has to go and call somebody. How do we change the order in which they call that person? So you have to think about how the people that are going to use your model, and it's not necessarily the end customer always, it can be an internal customer as well. How are you going to get that person to use your model? Because that's the only way that you're going to prove the value that you created, is if that person actually uses it. The next one is scalability. So you want to make sure that your experiment that you're going to build, it doesn't just work for 100,000 customers that you've sort of trained your model on. You want to make sure that it's going to go for the 14 million customers at the bank. So that's the first version of scalability. Then it could be, look, this data is going to have to arrive in a streaming basis. So how do you go about that, right? So make sure that it can actually scale to where you need it to scale to. And then obviously continuous measurement. It doesn't help measuring it once off. You have to continuously measure the value you create, which will also then help in generating adoption if you can prove the value. Then one of the things that you often get asked as a data scientist is you'll make this claim, I've created this much value. And the question is, why don't you prove it? And basically what you need to do as a starting measure is you need to define winning. So what is the measure you're trying to create? What's the value that you're going to create? Then you need to make sure, okay, I can get all the data and calculations that I need together to prove that that is the measure that I want to, that this is the measure. Then you have to make sure, all right, that is now a great measure. Our baseline is 0.1% of outbound SMSs are resulting in sales. We want to get, for example, 0.2%. We want to double it. So you set your baseline and a target. The next one is your continuous monitoring, reporting, and improvement. So you need some way for those results to come through on a continuous basis, and you will find something funny that ends up happening somewhere in that process, which means that you will need to continuously improve it. And even if that weren't the case, customer behavior does change, so you will need to change your approach over time. And one of the ones that my business partner, Pravin, added to the slide that I accidentally forgot of there is you have to socialize it. You have to talk to the people that are going to need to believe you eventually, to say, this is what we're measuring, this is the value that I've created for your world. And that's very important. In terms of communicating value, there's sort of three broad pieces that we want to talk about there. Obviously, as consultants, communication forms a big part of what we need to do. And the first part you need to do is understand and clearly articulate the benefits that you're creating. So you can say, for example, we want to make sure that we're going to respond with up to 50% of our client conversations using a tool like a ChatGPT or something like that. And that it has a measure linked to a KPI, which is an improved customer score. So your net promoter score needs to go up by a certain percentage, or you can say our average cost to serve needs to decrease. Now, it's important to note that there are two aspects in there. There are tangible benefits, which are the ones that we've mentioned now, and then there are also intangible benefits. And we have found that the intangible benefits on the odd occasion outweigh on the other side. So if you've got a completely overloaded data science team modeling themselves to death and they're starting to make mistakes, in that case, taking off some of that load off that team, that can be an intangible benefit that makes a huge difference to your organization. The second one is you want to motivate your measures. So you want to socialize the basis of the calculation. Somebody is going to ask you, I don't trust that number, it should be 0.2%. So you need to know that what the measure is. You need to have agreed and socialized with people a way of agreeing what that should be. So the first one is the value. That could be your take-up rate or something like that, number of sales. The next one is the formula, and particularly in financial services, that you will find that people disagree about this a lot, so you have to bring them along on the journey. The data that's going to be used to feed into that, and then very importantly, and this stems from the keep the human in the loop kind of perspective that you get taught in AI a lot, is you need to have human oversight, and often you need somebody like finance or that kind of a team to actually sign off on what you're doing. Then, very importantly, give credit where it's due. So recognize the nerds, myself included, the data scientists, data IT, all of the technical people that made the thing happen. Also recognize the frontline team. Recognize that they're the ones that actually implemented your AI and actually made the difference. They made it possible. And your executive sponsorship in terms of saying, this is where we've created the value for you. And you need to recognize that executive and say it was part of their sponsorship that helped create this. And it helps you create the relationships that matter. Cool. Our call to action from this is whether you do it with us or if you do it with somebody else, we'd like you to think about your experiments that you want to do in these steps, right? So have an ideation workshop. These are fun. Sit around the table and get all the ideas on the board. No idea is terrible, some of them are, but then what you do is you actually write all of them down and you pick the best ideas out of that. Then you put together a proof of concept. How do we only spend something like 3 to 6 months on a project on something that's going to add meaningful value to the company? You have to prove not just conceptually that it works, which is always the interesting thing for me for a proof of concept, but it's more of a proof of value. I can prove that I can create value. Measure and manage. Go through the process and make sure that you measure all the bits that you want to, so you know which parts you want to keep and put into production and which parts you can post along the side. And then what you do after that is you move forward and you do the next piece of fun analytics that you want to do. So for those of you in the crowd who would like to win one of our tote bags, it's a little piece over here. And it has a glass writing place, and it's very convenient to have next to your desk. That was almost on the floor. It's one of these, and it's got a couple of writing implements, and we'd like you to please come and sign up at our table next door, or you can do it from this screen over here. And the last piece is, this is where we are, in case you would like to find us.